Look at that. That is one hell of a gap up for Tesla stock. Currently up close to 19% at the time of recording this video. Tesla earnings came out last night. In case you're unaware, they beat across the board. The only thing that did not beat was top line revenue, and it came in slightly below estimates, but Wall Street doesn't care about that. They care about margins. They care about the next gen vehicle coming by midpoint next year. We even got news that Tesla is expecting 20 to 30% vehicle delivery growth next year. And that was something that caught everyone off guard. I mean, myself included. I expected Tesla would go up around 10% or so because I figured Tesla would reaffirm the Model 2 or the lower priced Tesla is coming still by midpoint next year. And that was the big factor that was going to boost Tesla stock. I also figured margins were going to come in better than expected because of the fall in treasury yields we've seen last quarter. But I didn't even expect Elon Musk was going to give 20 to 30% vehicle growth guidance for next year. That even caught me by surprise. With that said, as I explained last night, this kind of changes everything for Tesla in a good way. Here in this video, I will explain some of that. We'll talk more about that in the next video, but we have a lot of news. A lot of analysts and a lot of investment banks are coming out and raising price targets for Tesla. In fact, this is the most price target raises I have seen in a single day on a single stock in a very long time. This post is from Sawyer Merritt, and I could go through the news wire and share each of them individually, but Sawyer Merritt does a good job here in just laying it all out. So let's run through this. Bank of America raised their price target from $225 or $255 to $265. Goldman Sachs raises their target from $230 to $250. Fulton Securities raises their price target from $282 to $330. That's a big jump. Canaccord Genuity raises their price target from $254 to $278. RBC from $236 now to $249. Truist raised theirs from $236 to $238. Cantor Fitzgerald raises theirs from $245 to $255. Jefferies raises their price target from $165 to $195. Guggenheim raises theirs from $153 to $156. JP Morgan, one of your most bearish price targets, raises theirs from $130 to $135. Wells Fargo, another very bearish firm on Tesla, raises their price target from $120 to $125. Wedbush maintained their $300 price target. KGI maintains their $276 price target. And Piper Sandler maintains their $310 price target for Tesla stock. So even some of your most bearish firms on Tesla that still expect Tesla will fall 50% from here are also being forced to raise price targets. And I think there's going to be a whole lot more of that in the coming quarters. Elon Musk also expects that Tesla will achieve full autonomy by next year, not just for the Cybercab, which, yes, that will allow Tesla to launch the Cybercab and the Robotaxi network in Texas and in California, but for all Tesla vehicles. As Elon Musk said last night, and I will quote here, "At that point, Tesla turns into more than a car and a battery company." See, the evolution of the AI trade in our markets is going to be years and years. It could be a decade long where we go through this wave of different areas of AI that see a rally, that catch a bid, that catch investor attention. At first, it's been GPU providers. Next up, it will be the AI appliers. All of that investment into NVIDIA products needs to come a point where there's successful products that are utilizing NVIDIA hardware and, to a certain extent, software. And Tesla is the biggest company that is going to make the biggest product that actually will change the world with AI. There is no other company doing something as impactful as Tesla with AI. And I think this next stage of AI investment will be into companies like Tesla, will be into data centers, it will be into software stocks that are actually applying this AI. And I think that's more of the longer term thesis, I guess, for 2025 and maybe even throughout the rest of this year if we do get an end of the year rally. That's one reason particularly why I'm very excited about Tesla, even here in the 250s. That is the catalyst that will push Tesla to new all-time highs. Take a listen to this. I mean, if there's nothing that I guess makes you prouder to be a Tesla investor, wow. I mean, Elon Musk says if Hardware 3 doesn't achieve unsupervised FSD, Tesla will update computers for free. He said, we will take care of those with Hardware 3. Elon Musk responded to this and says, do the right thing for customers and they will do the right thing for you. If only every company had that business model. Now, of course, I still do have my concerns. I still think a correction is coming, and that will inevitably impact Tesla also. I don't think Tesla is going to be immune from a 10% correction that we get in markets, which I still think is coming despite Tesla having good earnings. That doesn't really change the market-wide thesis. But it definitely helps things out when you have such a strong report like that. And Tesla so far is one of, if not the biggest runners on earnings. I can't recall another earnings so far that went up almost 20%. You're just not getting a lot of that this earnings season. So Tesla really stands out in that regard. Now, this image posted to X by Frida Duan shows the rate of improvement in Tesla's FSD disengagement ratio. That is stunning. She says it's proof that scaling laws apply to self-driving and real-world AI. You can see from Q1 of 2024, you were down here. It was very minimal. There were a lot of interventions compared to a human driver. And this was V12.3. But you have a 10 or 100x, 10x, 100x improvement from Q1 to Q3 of 2024. And from Q3 to Q4, which is the quarter we're currently in, when V13 launches, we are expecting a 5 to 6x improvement in miles between interventions. And then between Q4 2024 and pretty much the second half of 2025, we should get V14. And if we get another 5 to 6x improvement in miles between interventions, we are going to be better than a human driver. And that is what Elon is referring to at the point in which we get full self-driving to a point that is better than human drivers. That's really the flipping point, I think, for a lot of regulators for the safety standard with FSD and robotaxis. Once we get to a point where we're better than human drivers, it's hard for regulators to say we shouldn't have that technology. Now, longer term, of course, I do think there will be some kind of data center like operation with screens that monitor the robotaxi rides, just because there are those super edge case scenarios, even if you're a human driver, where, I mean, you see videos all the time, it happens to you all the time, where somebody just goes into your lane, like trying to hit you head on, or people run red lights, things of that nature, that sometimes you will need some intervention. But we'll see. Maybe even, AI driving could be even better than any intervention that we could ever possibly do as a human. Tesla's market cap today rose $126 billion, the biggest single day jump in many years. Michael Snyder has been promoted to Vice President of Energy and Charging at Tesla. Mike has been with the company for over 10 years, and for the past 2 years, he has served as Senior Director of the Megapack. RBC Capital on Tesla today says, quote, there is growth, and if they can do it with the margin strength that they have, now folks can stop thinking about the automotive pieces and margins and start looking at what really should drive Tesla stock, which is non-automotive things: energy, storage, autonomy, potentially optimists. Take a listen to this.
0.1% gross margin ex credit was a strong beat. I do think if you take out those FSD deferred revenue piece, you still come out with a very strong gross profit margin ex credit. And that comes with all those price cutting. So exactly that is why we actually think that the automotive performance was actually pretty healthy. They were able to do it with substantial price cutting. Look at the other OEMs, the legacy OEMs, what's been happening to their margins with price cutting. And I actually think the setup for next year on growth, I agree with Colin. It's not going to be 20, 30% that maybe Elon is saying, but we have a 13% growth rate, which is actually where consensus is. There is growth rate, and if they can do it with the margin strength that they have, now folks can stop thinking about the automotive piece and margins and start looking at what really should drive the stock, right? Which is non-automotive things, energy storage, autonomy, potentially Optimus. But now I think it's more of the distraction that was this automotive piece. Now folks can turn their attention to things that actually drive the stock price and the market capitalization to where it is.
Well, hence, as I said last night, this changes everything for Tesla. Quite literally, it changes everything. The whole dynamic of how we look at Tesla is now different. And really, a lot of that has to do with, again, Elon Musk projecting 20 to 30% growth next year. Even if he is wildly wrong, it's still going to be a very impressive number coming off of this year where vehicle delivery growth is probably going to be flat, if not marginally negative on a year-over-year basis. Next year, that's not going to be the case. We can look forward to growth, and that's what drives stocks higher, is companies that beat on earnings that continue to, guide higher and beat on those earnings again. And that's exactly what Tesla did today. And then they just gave you guidance that said next year is going to be way better than this year. Canaccord Genuity analyst George Giannis on Tesla's Q3 earnings beat says, quote, "The margins were exceptional. They continue to show time and time again that they're able to lower the cost of production and be the only one that can make money on EVs. And you're going to see Tesla outperform." Also worth mentioning that Tesla said last night that they expect slight growth in vehicle deliveries in 2024. That means, in other words, Tesla's expecting over 500,000 vehicles to be sold in Q4. If that is achieved, that will be a new all-time record. So it does set the bar higher. Let's face it, which is usually not the greatest setup. But if Tesla beats that high bar, yeah, the stock's going to be rewarded again. And you do see Wall Street that tends to underestimate Tesla. So even if Tesla is saying expect over 500,000 deliveries, the estimate's not going to be 500,000 deliveries. And construction of Tesla's upcoming Shanghai Megapack factory is now 80% complete. Just 5 months after construction started, construction was 45% complete 2 months ago. We are expecting initial capacity of 10,000 units per year, about 40 gigawatt hours, doubling Tesla's Megapack production capacity. And as Elon has said before, there's basically unlimited demand for Megapacks because of the lack of a product like Megapacks on the market and the sheer amount of energy out there that needs to be captured. Because if you don't capture and store excess energy from solar, wind, from even power plants, it gets wasted. And from that standpoint, every power plant, every power firm, every wind turbine, or anything that generates power could benefit from having some Megapacks. And Canaccord Genuity analyst George Giannis, as he raised his price target on Tesla from $254 per share to $278 per share and reiterated his buy rating following Q3 earnings, he said, quote, "What's more important for the immediate future and the stock's subsequent performance is that Tesla is likely an accelerating revenue and earnings story with an upcoming product cycle. We expect these attributes to lead to stock outperformance." Now, here on the day, as you would expect, sentiment for Tesla is bullish at 65, although it's not super bullish though. Like you would expect, it would probably be a little bit more bullish than it is today. So that in and of itself makes me more bullish because sentiment is not overly bullish even following today. Some people are still on the sidelines. Some people are still doubting Tesla. Some people, I think a lot of retail investors, they sold Tesla a while ago. They've been waiting to get back in, and they still haven't got back in. And perhaps now, after this beat that literally changes everything for Tesla, you could start to see more people start to get back into Tesla stock. And if you're not in Tesla and you want to be, if you like what you've seen or heard, I think even now is a good price, because I think next year you're going to all-time highs. As long as we don't have a recession or some kind of exogenous event like Elon Musk explained on the earnings call. Nonetheless, message volume today is extremely high for Tesla, coming in at 81, and the participation ratio is high at 55. Here on the day today, you have short interest of free flow at 2.66%. You have $15.8 billion currently sold short in Tesla, totaling 74 million shares. Here on the day today, you do have borrowed shares at 824,000, return shares of 61,000. That means you actually have about 763,000 shares that are being sold short today. And I think that's going to prove to be a bad idea to short Tesla here at these levels. Take a look at the option activity. You have 347 different trades totaling $373 million, which is a huge jump from what we've seen recently. Get this, with a positive order value of 91%. So let's do a little bit of just simple math here and say 373 million times 0.91. Out of $373 million of hedge fund institutional option activity today, almost 340 million of that is positive, either selling puts or buying calls. That is insane. With a number that's almost $400 million in option activity today, to see a 91% positive order value on that just shows how good this report actually was. Google Trends data is showing a pretty aggressive uptrend now for the Model Y. The Model 3 is catching some of that, as well as the S and the X. Cybertruck's falling, but it's all relative, right? There was so much attention on the Cybertruck. I expect that will fall as just some of that starts to die down. And when you compare these numbers, which is how Google Trends works, you should expect to see the Cybertruck fall. And that's what we're seeing. Cybertruck at 40, but look at the Model Y. It's went from 21 to 28. This is just for the United States, so showing some very strong growth there. The Model 3 went from, 19 now to 23, which is good. The Model S went from 9 to 11, and the Model X went from 7 to 9. So impressive search trend numbers for the United States. Specifically, if we look at worldwide, same trend. Model Y went from 31, now at 36. The Model 3 went from 30, now to 33. The Model S from 12 to 13, and the Model X from 7 to 9. Now, here on the day today, you see the percent of stocks trading above their 50-day moving average down 0.5% to 53.44%. You actually have the Dow that's down 0.7% today, the S&P down 0.15%, the Nasdaq up 0.25%, the Russell 2000 down 0.2%, which just emphasizes Tesla's massive outperformance, because today's really not a great day for markets. You can also see the VIX is breaking above 20 again, up over 4% now. Gold continues to move higher, up 0.52% today. And what's even stranger about today's selling activity that we're seeing in markets is 10-year Treasury yields are down about 4 basis points today, which is the largest drop in 10-year Treasury yields that we have seen since October 11th. But it does not look like that is helping the markets at all today. We did get some economic data that came out today. Initial jobless claims came in at 227,000. The estimate was 242,000, so that was better than expected. Chicago Fed National Activity Index came in at negative 0.28. The forecast was positive 0.2, so a little bit worse than expected there. Continuing jobless claims came in much higher than expected at 1.897 million. The estimate was 1.88 million. And the forecast here was 1.86 million. So that did come in higher than expected. People are staying on unemployment for longer. Now, composite PMIs came in at 54.3. The estimate was 54, so that beat. Manufacturing PMIs came in at 47.8. so that beat. The estimate was 47.5, and services PMIs came in at 55.3. The estimate was 55. New home sales, so that also beat. New home sales came in at 0.738. The estimate was 0.72, which beat. New home sales month over month came in at positive 4.1%. The estimate was negative 2.2%. That also beat. Kansas Fed Composite Index came in at negative 4. Estimate was negative 6. That beat. Kansas Fed Manufacturing Index came in at 0. The estimate was negative 16. So that really beat. You had overall pretty good data today, which is kind of strange why bond yields are selling off and stocks are selling off on that. You did have the Fed Beige book that came out yesterday, and in the summary it says economic activity was little changed in nearly all districts, and the Commerce Department says real GDP growth is running at a 3% annual rate. David Rosenberg says, come on, flat must be the new up. And it says here, overall economic activity. On balance, economic activity was little changed in nearly all districts since early September. Though 2 districts reported modest growth, most districts reported declining manufacturing activity. Activity in the banking sector was generally steady to up slightly, and loan demand was mixed, with some districts noting an improvement in the outlook due to the decline in interest rates. Reports on consumer spending were mixed, with some districts noting shifts in the composition of purchases, mostly towards less expensive alternatives. Housing market activity has generally held up. Inventory continued to expand in much of the nation, and home values largely held steady or rose slightly. Still, uncertainty about the path of mortgage rates kept some buyers on the sidelines, and the lack of affordable housing remained a persistent problem in many communities. Commercial real estate markets were generally flat, although data center and infrastructure projects boosted activity in a few districts. The short-lived dock worker strike caused only minor temporary disruptions. Hurricane damage impacted crops and prompted pauses in business activity and tourism in the southeast. Agriculture activity was flat to down modestly, with some crop prices remaining unprofitably low. Energy activity was also unchanged or down modestly, and lower energy prices reportedly compressed producers' margins. Despite elevated uncertainty, contacts were somewhat more optimistic about the longer-term outlook. So not much worse there than what we had last month. Oh, and in case I forgot to mention this, Elon Musk on Tesla's earnings call last night said, we are finalizing the design of the Tesla Roadster now. It will be something spectacular. My friend Peter Thiel was lamenting, we don't have flying cars. Well, more to come. Nonetheless, stay tuned to the channel for the video coming out at 8 p.m. tonight. We will take a deeper look at Tesla's technicals and my expectation of what is coming, not just for the broader markets, but for Tesla stock in the coming weeks and months. And trust me, it's a bit of a mixed bag, but very positive for Tesla. How could you not be? I mean, it's a tough bear case to make on Tesla right now. Even if you are a bear and you wanted to, you almost have to rely on a recession, which is not what the markets are currently pricing in. So let me know what you think about this information down below in the comments section. Ladies and gentlemen, you guys have a great rest of your day. Stay safe out there, and I will see you in the next one.